Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
So welcome back everybody. Let's take a look again on the euro currency. So today, as usual, we have prepared the weekly report when we have taken a look at the fundamental background. It's recent lots of actually noise that have made by the CPI report and what's impact what's happened on the market by these numbers. In general, guys, well, in today's report it's very short some conclusions that it actually agrees with our long-term view. In our fundamental long-term analysis, as you probably remember, because we talked about this in every report, as you know, we suggest that for a few months, the dollar should, or better to say, could keep falling, tending to our major target of the dollar index, and correspondingly, euro should follow to the more extended upper targets. And well, markets are very volatile currently, and on Friday we also talked a lot about this in video update. So on Friday we have explained why we think that currently we're more gravitating to idea that upward action currently is more probable than the deeper two-leg retracement on the euro currency, just because of the tendency on the dollar index and standing lower. So I don't want to repeat this again. If you would like to, you could review the Friday video. On the long-term charts, we talked in our weekly report today. So currently, we update just the short-term trading plan that we have prepared on Friday. By the Friday close, as you can see, we've got nicely looking bullish candlestick pattern, which calls as a morning star. It actually usually works as the same as the engulfing pattern and suggests upward extension. But before the upward extension, this minor retracement back in the body of the pattern should happen. So it means that to keep the bullish context valid, market needs to stay inside of the range of the pattern. As we said last week, that market has to stay inside of this rally, right? Based on the non-farm payrolls release, the market has completed this. We even have expected the smaller retracement, but consumer price index report has pushed price lower and shows a bit deeper retracement, right, with a 618 support. But anyway, that fits to our trading plan and doesn't break it. So, and currently, as the pattern stands in place, and mostly reaction of the CPI has been overcome by the market. As you can see, this market easily swallowed this and returns it back up. We make this suggestion that to keep our trading plan valid, market has to stay inside of the swing, and that will mean that market is ready to go higher. Our nearest target on the daily chart stands around 2216. That is COP, 618 extension of the whole ABCD action here. Also, we do not see any reasons to set another target just because even COP stands slightly above the daily overbought. So it means that in the coming week, hardly market will pass significantly higher than the COP if even we will get the strong upward action. Besides, recall what we said about the possible head and shoulders pattern here, that know what the shape will be. Maybe we already will get the breakout of the neckline, but also it could happen that the right arm could start a bit later if the neckline will stand right at the top here. And after the COP will be completed, market could show a deep retracement. Currently, it's difficult to say definitely how it will turn, but we need to keep an eye on this, what will happen around the COP. That's what about the daily chart. The most interesting chart for us is the hourly chart, since, well, actually it has all levels that we need for trading. On Friday, we said that market probably should move slightly higher, trying to hit the XOP and breaking the 618 level that has happened. XOP also has been reached, this ABC bottom, And now market, as we said, could show the pullback. We are watching mostly for just two levels for this pullback. First one, 21.23. Next one is 21 even approximately. 21 even, 21.10 is confidence support. And take a look. This is also the natural support of the former, as we call it, diamond consolidation, something of that sort. This market has broken up. Currently, this level will work as a support, and it stands right below the confidence. So if market really stands bullish, it should not break it down. That's why initial stop could be placed either, which is preferably below 2070. So because on intraday charts, the most reasonable first placing for a stop is 35, 40 pips approximately. If it's too far to you, well, you could consider 2080 area, just to place stop somewhere below the fib level, slightly closer. But that is just for some case. In fact, we are watching just for these levels. So generally speaking, it will be enough to place stop somewhere below this area. But we just give market some room just to do not be spiked out by some volatility around this area. So by our suggestion, that should be enough, so market should show some pullback and then reestablish upper direction. That's how just Morningstar pattern should work classically. So that's the performance that we're counting on. Also, guys, I think that we should not underestimate this level. Although it stands too close, but take a look here, we have some kind of a symmetry on the market. And it could be that market could retest just 2120 area with this similar retracement, small retracement, then reestablish upper direction. This also could happen. Another reason why I think that this level also might be important, just take a look at the market. Here actually was reaction on the resistance of this area. So market is protected, usually protects the levels that have been broken. So first market was the support. Once that's when it has been broken down, it's become the resistance. So and when market has come second time to this area, it again has become the resistance. But since price already has broken through this level, it enters in a new trading range, which is 21.25 approximately, 20 to 21.85 area. So this previous trading range that the market was falling out earlier in the beginning of the week. Now it returns back. And that's why this level again will be the support. So market will try to stay inside of this range. That's very probable by a few reasons. First of all, the major retracement already has happened with this CPI data release. Second, market is not at the rebuttal on the same resistance. So even on the weekly chart, 618 level has been broken. Here is also where the 618 resistance also has been broken. So actually, market has no significant barriers above the market except the XOP. But reaction on XOP could be really small. So although this level looks very attractive for a position taking, especially if it will be some kind of the Gartner's triple to buy pattern or something of that sort, but also not underestimate this level, just because it also could become the one where market actually will find the bottom and could start upper direction right from there. But anyway, this is all the stuff is minor tactical details. The major setups based on the daily pattern, on overall performance that we see on the daily chart. And in two words speaking, we are waiting for some minor pullback and upward continuation. If everything will be completed, all conditions will be completed by the market, and market will be able to stay above the 21 area, so upward action should happen.